With so much talk in the news about interest rates, I thought it'd be a good time to break down the differences between the federal fund rate, prime rate, and interest rates as they pertain to mortgages. So stand by for some really good information. Hey everybody, Keith Campbell here with Keith and Sheila Realty Group. So let's start at the very beginning. There's been a lot of talk in the news about the Federal Reserve Board basically going from zero federal fund rate to now, as of today, 3.83%. So what the federal fund rate is, that's the rate at which banks, commercial banks primarily, charge each other to borrow money, usually overnight, because by federal law, chartered banks have to have a certain amount of reserves to cover their deposits that the customers, you and I, deposit into the bank. So that's always a fluctuating amount, and the Federal Reserve can change the percentage or the amounts. So there's a lot of borrowing money back and forth between commercial banks. So how does that relate to prime rate? So let's define what a prime rate is. Prime rate is the percentage of interest that a lender charges the very best credit profile customer. So if you have a really high credit score, low debt to income, and you're financially really sound, you're going to get either prime rate or really close to it. So prime rate generally is somewhere between 2.5% to 4% higher than the federal fund rate. So right now, if the federal fund rate is 3.83%, if you go 3% above that for an average prime rate, you're at 6.8%. As of today, I was looking at some mortgages. They're right around, depends on the type of mortgage and, if it's a 15-year or 30-year. Let's just say a really good rate right now, 6.5%. So that's 2.75% over the federal fund rate today. So prime rate is around 3%, could be a little less, could be a little more than the federal fund rate. So that prime rate and the interest rate are determined really by a free market where supply and demand kind of interact, and based on your credit and what the lender's objectives are, kind of determines that rate. It's all driven by the Fed rate, right? Because that's what determines the prime rate. And then the prime rate to interest rate is determined by credit profile, loan demand. There's just a lot of factors that go into that, but primarily is driven by the free market, where supply and demand kind of interact with one another. Understand, when the federal rate is changed by the Reserve Board, most of the time when that happens, mortgage rates do not go up. Now, prime rate will go up, which means like your consumer loans, your personal loans, your credit cards, they almost instantly go up. But a lot of times mortgages actually go down a little bit, but they adjust, and they eventually will go up if the rate is continuing to go up. As we've seen them go from 3.5 to a few weeks ago, they were at 7.25, 7.35. Now they're back down in the 6.5, 6.6 range for decent credit. So that whole interest rate is not set by the government. It is set by the lenders. It's a market condition. It's driven by the market, the number of qualified borrowers versus what that particular lender wants to do. So sadly, a lot of real estate professionals, and I hate to say this, even some mortgage professionals I've met, don't even understand the difference between Fed rate, prime rate, and interest rate. And you want to know, if you're buying or selling, even if you're selling and you're not going to buy anything else, maybe you're going to go rent, or maybe you're going to do something different, you need to know what's going on in the interest, in the lending interest rates, because it affects how you can sell your house and how much you get for it, how long it's on market, all those kinds of things. And obviously, if you're a buyer, it really affects you even more. So if you have questions about any of this, feel free to contact us. If we don't have the answer, we have the resource to get the answer, I promise you. Ask lots of questions. If you're going to be shopping for a mortgage, I want to dispel a myth real quick. If you're shopping for a mortgage and they're pulling your FICO, you do not get dinged every time they do a hard inquiry for a mortgage. If you do all those hard inquiries, in other words, if you shop 2, 3, 4 lenders and you do it within 21 days, even in some cases 30 days, you're only going to get dinged one time for the hard inquiry. But you can't spread it out over a long period of time. It's got to be in that 3 to 4 week range. And I do recommend you shop it, because the interest rate is just one part of the loan. There's also all kinds of fees that can be added in. They can have a great interest rate, or they can be a little bit lower than the competition, but then they may have a exorbitant, processing, underwriting, origination fees. So you got to look at the totality of that lender. And the best thing to do, and we tell our clients, we have our preferred lenders we like to work with, but we really ask our clients to shop it around. Credit union, bank, mortgage company, ask them for a loan rate sheet, and it'll break down all the fees and what your interest rate is based on them pulling a hard inquiry on your credit. But you want to do that. And also make sure you get a pre-approval, not just a pre-qualification. A pre-approval is where that lender sends it through an automated underwriting system, and they're really verifying everything, not just your W-2, your pay stubs, your tax returns, your debts. And that's going to make you have a better, stronger offer if you're a buyer. And if you're a seller, I would recommend you tell a buyer, I don't want a pre-qual, I want a pre-approval. I want to know you've been through some form of underwriting, even if it's just automated. So that's our best advice on all of that. If you have any questions about real estate, about mortgages, we're not mortgage experts. We're not licensed mortgage officers, but we have resources to great ones, and we do a lot of deals, have for over 10 years. So we've accumulated some experience and some information. We'd love to help you. Have a blessed and awesome day, and contact us if we can be of service. And whatever you do, whether you hire a realtor, a mortgage company, whoever, always hire somebody who's going to serve your best interest, not just to make a commission on their part. Take care.